Delinquent taxes. Taxes become delinquent on April 1st of each year. As of this date, certified funds are then required for payment of any tax, and delinquency interest is applied. Once taxes become delinquent, the tax collector then sends out a reminder tax notice to all delinquent property owners in the county. These are typically sent in mid-April, and they are in a combined bill format, meaning all tax years that are delinquent on a single account are listed on one notice. The notice also includes important information on the tax certificate sale. Lastly, once taxes become delinquent, the tax collector is then required to publish an advertisement in the newspaper each year. This is typically published in May, and for real estate taxes runs once a week for 3 consecutive weeks. And for tangible taxes, it just runs one time.
Tax certificate sale. We're required by June 1st to sell certificates on any accounts that have not paid their taxes by June 1. That's just the last day we can do it. That's typically the day we do it. We want to give our property owners as much opportunity as we can before we issue a certificate. And what it is, it's a first lien on real estate taxes. So if you have a certificate and you're trying to sell your property, that's going to have to be cleared up in like a closing. Those taxes are going to have to be paid. Because what it means is there's a third party out there that, you know, has a lien against your property and could take action to obtain that property later on. They yield interest up to 18% a year, so interest is pretty high. There's not many investments you get 18% return on per year, so there's lots of interest by investors out there to buy certificates on property. And that per annum means 1.5% per month, so every month that certificate's outstanding. That if someone buys it at 18%, they're earning 1.5% interest every month that property owner has not paid their tax. And so that account in our system is just hitting interest every month. It can be as low as 0%, which we don't sell many at 0, but a lot of them do actually get sold at 0.25% interest. So there's so much competition. We have about 1 million bidders in our sale because it's online. So pretty much whoever's willing to take the lowest amount of interest gets awarded that certificate. So it pretty much bids down to the lowest possible interest rate, which is good for our property owners because, you know, if they can't pay, usually there's a reason they can't pay. We hate for them to just be hit with lots of interest every month. Our tax sale is held on the website bidokaloosa.com, and it's a reverse style auction. Pretty much in the first week of May, the site gets loaded with all the delinquent tax parcels and people can log in. And they're not bidding to buy a property in that. They're bidding to buy a certificate at an interest rate. So their bid is pretty much, they want this property at, say, 5% interest per year. If another bidder comes in and says, I'm willing to pay those taxes and buy a certificate at a lower rate, then that person gets awarded that certificate. It's a way for the county to get the funds that have not been received yet. So when that certificate gets sold, we get the money, we disperse it out to the authorities, so it pretty much gets the rest of our taxes paid. And at that point, whenever the delinquent property owner pays us sometime down the road, that money that we collect at that point is not sent to the taxing authorities, but it's sent back to whoever bought the certificate. So that's when they get their money and their interest back at that time. It's effective in I actually have the wrong year there. In 2013, $10,000 out of that $190 million was left uncollected after we went through the whole process of the tax certificate sale. Last year we had $0 left uncollected. We sold every certificate. It's just kind of a, you know, there's no way to guarantee you'll sell them all. Because there's some pieces of property that have a $20 tax bill that are swampland or landlocked up in the north end of the county. And keep in mind, you're not buying the property, but you are buying an interest in that property, so you want it to be something that's somewhat worthwhile. I don't know if that all made sense. I kind of ran through that real quick, but y'all won't need to understand the entire details of the process of it, but I just wanted to give you a quick rundown. But the main purpose is why we do it, and it's to get those last few payments in to get out to the authorities that need those funds to operate. Tax certificates last for 7 years. So typically we issue them on June 1st. 7 years later, if the property owner has not paid that tax off, then that certificate expires, and whoever bought that certificate, say they bought it for $100, they lose that $100 plus any interest they put into it. We don't have many that expire because certificate holders have the option to force that property to go to sale after those taxes are delinquent for 2 years. So they can't really do anything with it for 2 years. If the property owner comes in and pays off the tax within that period, then they just get their money back. After that 2-year period, they can then file an application with us and the clerk of court will auction that property off. And that usually results in the property owner finding some money to pay that off because they don't want to lose their property. Or if the clerk of court actually auctions the property off, when it's sold, the proceeds from that sale go to pay back that certificate holder. And because usually someone else shows up and bids and buys the property. It's an open public auction. So out of about 5,000 certificates we sell annually, we have about 300 a year that go to tax deed sale, and probably only about 30 of those actually get sold. So a lot of times property owners find a way to pay off that delinquent tax and basically redeem that certificate holder before they lose their property. But it just does give that certificate holder one option to try to force their hand and cash in their certificate. Now the certificate holder can't contact that property owner and basically try to persuade them to pay off their delinquent tax. We can send a letter. They can send letters after the taxes are delinquent, after it's pretty much past that time period in which they can file a tax deed application. But we tell our certificates holder that don't go harassing the property owners you bought certificates on, because we can bar them from future sales if those things are happening, which has never been a problem. But